Hi, this is Jack from Alpha Charts with a long view video. Today is April 10th, 2022. Before we get started, this video is for informational purposes only, and these are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so a quick recap of what the long view is. So the purpose of the long view is to find relative strength in the market. I am looking on longer term time frames, which is the weekly time frame mainly. And this type of system is made for people that are working full time or are just looking for relative strength in the markets, but especially for people that can't watch every tick of and can't trade in and out on a quick basis, are getting chopped up in this market because it's a tough market. Again, this is looking for things that are outperforming. So I'm using ETFs to minimize the risk associated with single stocks, right? So ETF is a group of stocks, and I think that also minimizes risks of single stock ownership. And again, it's going to follow the trend. I'm looking for trends here. As far as my setup goes, again, it's weekly charts. I have the 8-week EMA and the 13-week EMA. All right, that's the red and the green. And down below is the trader line, relative strength line, is compared to the SPX. You can actually compare it to whatever you want to, but I'm using SPX as the default. And again, this is looking for outperformance. So the numbers don't matter here as much as the direction. You see this is against the SPX, so it is basically flat, right? Again, the direction is most important, okay? So that is the way I'm setting up my charts. So let's get into them again. I'm looking for which sectors are outperforming, then specific ETFs within that sector. So as we know, energy has been doing amazing, but really there's three that I brought up, now for pretty much every week, which is doing, really outperforming, right? And that's what we're looking for. And XOP is one of them. Again, we're now extended. So finding your spots, maybe like a pullback like here would have been a good spot, right? And then it just keeps ripping higher. But again, finding your spots is important. It is extended. So wait for that kind of pullback type of action. And then maybe there'll be a spot to be had in this one. OIH. Oh, I'm sorry. I always forget to do this. What makes these indexes up? Okay, so if you're looking for specific stocks, which I don't recommend, but it's good to know what you're owning in the ETF. So XOP is an equal weight ETF. As you can see, there's your weightings, and this is what it is holding right over here. So you have an idea of what's going on. All right, OAH. Kind of broke out, and now it's kind of been going sideways for 1, 2, 3, 4, 5 weeks, right? So now we're getting, letting these moving averages start to catch up. Things are starting to, maybe the risk reward is starting to get into our favor. I did notice that the trend, because it's been going sideways for 5 weeks, you have to watch this trend. So manage your risk, and again, you have to figure out where you want to manage risk at in a name like this if you choose to use it. But a pull back into the moving averages, that would make sense, right? And then you can manage risk again, maybe, this low, maybe a moving average, maybe right over here. But I would wait for that pullback. Again, this is still fairly extended, even though it's been consolidating for 4 or 5 weeks. So watch this again, and this just means that you just see the sideways motion in the relative strength right over here. So what is in these names? Schlumberger, Halliburton, Baker Hughes, Tenaris, Helmerich, Payne, and so on. You can see all the names right in here. Again, not an equal weight index. So you can see that Schlumberger and Halliburton, they make up a good bit of it, right? With Baker Hughes, that's a very huge part of this. That's about 40%. So it's a big deal. These three stocks, but that just looks like consolidation to me. So again, if you get in at the right spot, early pullback in the week, and you can manage risk right there, and then if you're wrong, you'll know, fairly quickly. All right. PXI, very strong looking name here, and it's coming up right to a very important level. This is from 2016, and then 2018, it came back up to this level, and now in 2022, back up to this level. And so we'll see if it decides to break out. It also has been consolidating for, we'll call it 3 weeks now, and a lot of accumulation bars in this particular name. Now we're starting to see volume dry up. So again, it may need a pullback, may not need a pullback. Decent, you got to figure out where the risk reward is right for you. Again, it's a little bit extended from the trend line, so maybe it needs to come back and touch the trend line again. I don't know, but this looks pretty good, especially if you can break out above this area. I like that a lot. Holdings, LNG, Range Resources, Matador Resources. So Antero's in there, Targa, SM Energy. So Devon is in there. Anyway, so as you can see, 3 different energy ETFs, right? Very little overlap. There's a couple in this one, I guess. Not much. Nothing, no real big overlaps in this one. Again, this has a few of the same, but this is, kind of equal weightish. But looking really, really good. So you pick which energy one you think is going to work the best, and you go with it, and you manage risk. That's what we do, right? All right, so those were the 3 energy ETFs that looked really good. Not all of them are actionable, but intra-week they may be actionable. Just because, let's just go back to XOP real fast. This one's extended, but if you get an early week pullback, it's such a great outperformer. It's worth a try, and you manage the risk, and then you see where it ends up, on the pullback intra-week. So you don't have to wait. It doesn't have to be a Monday buy, what I'm saying? And maybe Tuesday that pulls back, who knows? Right to this kind of, if it comes all the way back to 125-ish, comes back to even 130-ish, it's a place that for, 3 or 4%, you can manage risk nicely, but let's keep going. Healthcare was super strong this week, and let's just pull up the sector. I mean, it looks great. Strong week, 3.45 up. Beautiful outperformance on the sector again. And you can just buy the XLV, right? Just like the XLE. Let's just go back. I'm sorry. Just like the XLE, it's gone literally straight up. Again, this is a little bit of a exaggerated, so it may need to come back and touch this longer term trend line as it consolidates right here. But again, it just looks fantastic. So you don't want to mess with any of these ETFs. You just buy the XLE, and it's doing fine, right? And you get a little bit of everything. And healthcare, same way. I mean, it's a nice looking setup on there, but there are certain things outperforming even the XLV, and that's my point. So IXJ is a global healthcare, and as you can see, it is really starting to take off. Look at that. I mean, it's a beautiful thing. And there's your breakout. So this is something that's very actionable. You got the bullish momentum cross right over here, bullish moving average cross. It's got a breakout on high volume. I mean, it's a beautiful thing. Now, does it need to have an inside day here or something like that to really let these moving averages catch up? Maybe, but it's not that far from the moving averages. I mean, when you really look at it, you're talking about 5.5%, something like that. Not really that bad. So looks great, but what's in it? Let's find out. United Healthcare, Johnson & Johnson, Pfizer, AbbVie, Roche, Eli Lilly, Thermo Fisher, Novartis, Merck, Abbott. These aren't penny stocks. These are gigantic companies. Again, it is weighted too. So just know your weightings. Gigantic companies. So, I mean, what's not to like? It's a double bottom-ish look to it. Breakout on volume. As good as it gets. IXJ, beautiful. All right. Next up is IYH. US healthcare. So that was world healthcare. This is US healthcare. Looks almost exactly the same. Again, you're seeing the outperformance again. And just so you know, when I talk about outperformance, this is not only was it outperforming the S&P, but it was actually outperforming its own sector, healthcare. So it's the best of the best. Okay. That's why I don't have 10 healthcare names in here, because a lot of them did well. I'm only looking for the ones that are outperforming even within its own sector. And that's a huge differentiation. But let's look at the IYH. Again, you're going to see a lot of the same names, healthcare: Johnson Johnson, Pfizer, AbbVie, Lilly, Thermo Fisher, Merck, Abbott, Danaher, Bristol Myers. A little bit different makeup, not that much different though. I mean, a lot of the same names, but you see, like, this is Roche. Roche is a European company, so that's why it's on here. Novartis, European company. So you're getting a little bit different exposure versus all US. And you see the weightings. Healthcare: Johnson Johnson is a much heavier weighting than in this particular ETF. And which is why I left it on this list, even though the chart looks very much the same and this looks very much the same. Want to give that option out there. And the last one is PPH. And I talked about PPH a few weeks ago, actually, in this setup, and it has just done magnificently, right? Big breakout, no real volume here, but the volume did come in as it broke out, and it has done extremely well. Is it extended? Absolutely. I'm not entering here, but on a potential pullback, even intra-week, or inside week, to let these moving averages catch up, that would be potential entry point. Okay. PPH, AstraZeneca, Lilly, AbbVie, Novartis, Bristol Myers, Pfizer, Merck. I'm sorry, there's Novo Nordisk, there's Novartis, Johnson Johnson. So you'll see, even in the, looking back, there's overlap, and there's a good reason for that, right? Why all these are looking great, and that's because it's just fantastic, right? I mean, like, these names are doing great. So yeah, I mean, so the drug companies are really driving the market, and outperforming. Again, if you weren't in them, then I think it's a little too late to chase them here, but inside week would be really nice. Or you can get involved in one of the other ETFs that also has exposure to it. Again, beautiful outperformance, amazing volume coming in. Looks really, really good. All right, next up is going to be staples. Only one ETF I really like in this one, and it was PBJ. And it's a food and beverage ETF. And, the outperformance is and has been strong. We've talked about this one. It's really starting to move. Maybe a little extended, not terribly though. I mean, when you really look at it, we're only talking about 5%. So you got to decide what is your expectations. Maybe it pulls back to 46 or 46.50, right? And that may be a nice, intra-week buy. Then you can manage versus the moving average, and things look, that'd be a great risk reward there, right? This looks like an area of $46. Pull back to 46. That would be great for somebody to manage risk against. But I like how these are starting to separate. Looks really, really good. And get rid of that. And what's in there? Archer Daniels, Constellation Brands, Hershey's, General Mills, Pepsi, Coke, Dr. Pepper, Mondelez, Kroger, who's amazing, did it awesome on Friday. And whatever this is, Anderson's, I don't know what they make, pretzels maybe. But you see that all these names, not huge, they are huge companies. None of them are really all that exciting, but the ETF is exciting, right? This looks really good. It's outperforming, has been outperforming, whether it's an inflation trade, a staples, a defensive, who cares? Like, what we care about is this. It's working. And that's what we want to be in, things that are working, right? Listen, if technology was working right now, you would find technology on my list. It's not working right now. You know what? Kroger's working right now. Constellation Brands is working right now. Coke and Pepsi are working right now. That's what we've shown. So PB&J looks really nice. Moving on. All right. So materials, XLB. XLB had a few that looks really good. GDX, gold miners. Nice cup and handle on the weekly. Really strong. Again, may need another week or two to consolidate. Maybe it touches a trend line again. We had 1, 2 touches there. Maybe it needs to touch it again. I don't know. Maybe not. It may just take off from here. But I do like it's good risk reward here. Consolidation in the handle on lower volume. Obviously we like a handle that drifts down, but it's drifting to the sideways. No big deal. Higher low, higher low, higher low. That's very constructive. So that tells me it's a VCP style pattern. You have 3740 as the 8 EMA and even 36. So is it still extended? Maybe a little bit, but next week it's going to catch up a little bit more. So again, inside movement right there, it's a nice place to manage risk. There's your VWAP from this failed breakout right there at 38.23. That's a place that you could potentially manage risk against. Even though it did violate it a few different times, it seems like it's going to start to respect it a little bit more. So again, gold miners, we've talked about it for a while, hasn't done a ton, even though each week it has been up, right? I mean, we've talked about it for a while and then had this week right here, and then it's been up every week since. So as you can see, the outperformance is there. Looking at what's in there, and we have Newmont, Barrick Gold, as we talked about, that's 26%. And then you have all the other ones in here. So a lot of good gold miners in there, not all of them US based, right? There's Hong Kong, there's Australia, so not all of them US based, but again, miners look fantastic. Love the pattern, hasn't really broken out yet. Very opportunistic here. All right. We're gonna move on to GUNR. Again, we've talked about GUNR now for weeks, and for good reason. It has outperformed for weeks. Again, I don't even know where to put this trend line, right? I put it right there, I guess. I don't know. If I put it here, it's possible. There's 2 touches, but the point being is going up. The last 3 weeks, we'll call this kind of a consolidation and let the moving averages kind of catch up a little bit, but it's still going higher, a little bit extended, about 10%. So it may need another 7%, may need another week of kind of the sideways type of action, but every dip has been bought so far. I mean, just bullish run going. So it's a nice mix. I really do like this mix because you're getting fertilizer names, you're getting oil and gas names, you're getting some of those staples names, you're getting some metals and mining names in here. So it's pretty awesome mixture of what's working in the market, right? I mean, literally, if you say what's working in the market, this ETF is what's working in the market. Really strong trend. It's not too steep at this point. Really, it's a nice 45-degree angle. Again, maybe a little consolidation the last 3 weeks or so. It's okay. And you see, it doesn't mind coming back and dipping through that 8-week moving average. So that may be a great point to start a new position if you're not in it already. If it could dip in, then you could use the 13-week, which is the red line, which it has not disrespected yet. As it's moving higher. So something to watch. Whatever your risk is, if you have a bigger risk tolerance, hey, smaller size, bigger risk tolerance, whatever. But this is a nice looking chart. Again, I'm watching this potential change in trend here. And it's just moving sideways. It hasn't really done anything wrong. And it's still an uptrend. So love it. It's GUNR. Next up is XME, metals and mining, right? Really strong looking name. Again, when you get out of there, when you look at it, it's gone sideways last few weeks, as all strong names eventually have to do. Again, super strong, and now it's kind of in a range, right? So that's what has to happen for us to get a good entry. It is roughly 10% or so from its moving average. So again, another kind of inside week right here, or pull back to kind of like these lows, 59 or 60 ish, may give that risk reward entry that may be good. Again, it's really, really strong. It just went up, I think, a little bit too fast. So it needs a sideways move, just kind of like in here too, right? Had a really strong move up, went sideways for a couple weeks, move up, sideways for a couple weeks. Maybe it pops on Monday. I don't know. But again, looks pretty good. Know your risk tolerance. What's in it? MP Materials, Cleveland Cliffs, Peabody Energy. So you have coal, you have rare earth minerals, right? Steel Dynamics, Nucor, Alcoa, United States Steel, Newmont, Royal Gold. Again, metals and miners. Not quite equal weight, but pretty darn close to it. So nothing is really dominating too much in this particular one. Kind of nice to see there. Again, 3 weeks of or 2 weeks of consolidation. Maybe it needs another week, maybe not. Maybe it's an intra-week pullback and then it goes up. We'll see. All right, uranium. URA, that's next up. And as you can see, it is starting to move higher again. Again, this is kind of where I'm putting my trend line for the outperformance. It came back, almost touched it, didn't. Maybe it touches it, maybe it doesn't. But again, very, very strong and starting to lift off. Again, 10% from its moving averages. Again, so it may need a little bit of a pullback because the week was so strong, or an inside week, right? Just go sideways. Maybe an inside week gives us that trend line touch and then moves higher. Tons of volume coming on this particular one, making the right side of a base. You know, that's kind of like, that would have been your cheat entry right there. Again, I wouldn't have, it was starting to show outperformance even back here. And it's been on my list before, right? And it's continued higher. So uranium, really, really strong. Again, the only problem with uranium, it is dominated by Cameco, 25, 26%. So as this stock goes, it will bully the market. It is what it is. But again, there's your uranium names. Chart looks great. Again, an inside week looks like it could be a buy right there. All right. Moo, Van Eck Agribusiness, super strong name. Again, had move up, sideways, starting to move higher again. Maybe it needs a little bit more time here. It is kind of extended, about 7% or so. So not crazy. So maybe midweek it goes kind of sideways and then could break out towards the end of the week. Again, everything looks great in this name. The trend is to the upside. Lots of volume coming in. So it looks fantastic. Its holdings. So Moo is Bayer, Deere, Zoetis, Nutrien, Archer Daniels, IDEX, Corteva, Tyson, Tractor Supply, Mosaic, CF. So you have not only do you have the fertilizer names, you have the equipment names in there. You have some pharmaceutical type names. I believe Zoetis does animal pharmaceuticals. Bayer, they do fertilizer, animal pharmaceuticals, all kinds of stuff. You have the producers like Tyson Foods, they're chickens, I guess, Tyson Chicken. So all kinds of stuff in here, right? Nice little mixture for agribusiness, and the chart is liking it. It has a brother named VEGI. Again, it's the producers fund. Lots of volume coming in. Very similar chart as Moo, going back and forth. Inside week, right? That was something to take note of. Inside week. So this one potentially could move. Again, it's a little bit closer to its moving averages. So if you're looking to get in this one, in this type of sector, looks pretty good, right? Like it may be setting up. Nice little uptrend going on there. So what's in this one? Deere, Nutrien, Archer Daniels, Corteva, Mosaic, CF, Kubota, all that, Bunge, weighted differently. Deere is 18%, right? Nutrien is 9%, Archer Daniels 8%, so on and so forth. So it's weighted differently than this one, which makes the chart look a little bit different, but it looks fantastic. Also, a lot of the same names in it. So if you're interested in this type of name, the VEGI ETF could be the one for you. All right. last one in this bunch, steel. So steel, again, there's your something like that, or I could even probably do something like that, really. Anyway, steel had this kind of like cup, little bitty handle right there. There's your breakout, and now side, and it's all within the breakout bar, which is huge volume. There's your low volume sideways movement, letting the moving averages catch up. Moving averages now are roughly 7%, from it. I'm using the 13-week as my lowest moving average. I like that they're kind of starting to break through that breakout area I highlighted. Again, and this may not, maybe the breakout area is up here. There's a gap that potentially could be filled right in there. So maybe it comes back. If it does fill the gap, that'd be a great spot because you can manage risk very effectively against this. If it starts to break lower, even beyond after filling the gap, you're out really quick. But this looks really good. SLX, steel names, Vale, Rio Tinto, Nucor, MT, Tenaris. See, all of these were in GUNR, right? Here's the GUNR. And there's Rio Tinto, there's Vale. So, again, you have to decide what chart looks good. And again, and here's your weightings, right? So if you think that the miners are really going to be taken off, and the steel names are going to be taken off, then maybe this is the ETF for you. The chart looks good. Again, I love that it's all inside this bar. I mean, that's a strong consolidation there, right? Very strong consolidation. So it looks good. Any early weakness could be a great little buy point for that. Okay. Last one on my list is IDU. It's actually a utilities ETF because utilities have been really good recently, and I tend to shy away from them because they don't really move that quick. But this particular one is just a U.S. utilities ETF. Again, great outperformance versus S&P. Very nice breakout here. It's about 6-7% from its breakout point. I don't know if it's going to continue higher or if there'll be an inside week to let these moving averages catch up. But it's a good looking name. I mean, if it interests you, get it. What's in there? Nextra Energy, Duke Energy, Southern, Dominion, Waste Management. So you have some industrials in there. And as you can see all this, again, there's weightings right there for you. Again, if that's your thing, I'm sure it pays a dividend. I don't have no idea how much. And we're going to talk about dividends in a second. But it's a good looking name, right? Maybe an inside week, maybe it's a pullback and then a breakout, whatever. And then move higher. So those were the ones that I found for you this week. Some of them were extended, but are still really, really strong. Some of them are very actionable. Here's the ones I felt were the most actionable going into this week. OIH. I like that there's 2, 4, 5 weeks of just a sideways movement. Moving averages are really starting to catch up. And it is 10% from its 23-day, but I'm sorry, from its 13-day, but it's starting to really catch up. And you see, we've had, again, a couple of really strong weeks, and now it's just digesting it. So OIH, I think, looks pretty good. IXJ, so the global healthcare ETF. I mean, this one is just almost perfect, right? I mean, it has everything going for it. The move is just starting. IXJ looks really good. IYH looks fantastic. And if you look at it, very similar charts. It depends. Do you want the global, or do you want, the US based? That's really your choice in there. But they're very, very similar in what they're doing. And both look really, really good. GDX looks fantastic, right? I mean, this one looks like ready to really explode. Just perfect, really. So GDX looks amazing. Mu or VEGI, they're both looking pretty good. VEGI may be a little bit more actionable into this week, but again, the weighting's a little bit different. They both look really nice. And my last one will be the steel names. I like how, the risk reward, especially with some intra week, weakness in the beginning of the week at least, would really cause these moving averages to just give you a little bit tighter risk reward with price coming back into them a little bit. Again, maybe closing that gap. So 64 and change, what was the high there? Yeah, 64.76 was the high. So somewhere around there, right? If it touches the 8-week, basically, that would be a great entry, in my opinion. All right. So those are the names, my top names, and there was 6 of them. Mu and VEGI, we'll call it 7. But really, when Mu and VEGI were the same, and the 2 healthcare names were kind of the same. But you have to pick which one you like better. All right. So let's go out over what I am doing, and we're going to talk dividends here. So Trader Sync, I had not figured out how to put dividends into Trader Sync yet. I'm going to actually contact them and see if there's a way. So boat did stop out on me, and I should have been smarter with that one, to be honest with you, because as it kind of climaxed top and came back in, I was true to myself, and I stopped out with a hard stop in, and I stopped out on its own. But after the dividend, things really kind of fell apart in this particular name. And so you see the relative strength fell apart, but I let it go. So it doesn't take into account the dividend. So it's really not that bad of a loss as 6.28%, because it was a gigantic dividend, apart from that Zim special dividend thing that was going on there. So it was still a loss, but it was just barely a loss. I haven't been able to figure out how to get the break-even point, how to put the dividend in yet. What else? My clean energy ETF also stopped out this week, just north of break even again. So it's a wash even. There you go. And these names are still working. Cyber is one that's really maybe a little bit of trouble here. Yeah, Cyber is the one that's in a little bit of trouble, and it may stop out next week. Again, technology just really isn't working anymore, right? And if you notice, there you go, right? So it's definitely a trend change in the cybersecurity ETF. And again, early next week, I'm kind of expecting it to stop out. It'll be just north of break even. So it should stop out in money, but just barely. And that's okay. That's the way it works, because these are really working. And then this type of action frees up money to go into the next relative strength items. So maybe I go into healthcare this week, and who knows, maybe the steel names pull back a little bit, or whatever. I don't know. We'll see. Or maybe I keep some as cash, right? Because maybe next week there's a better name, and I don't want to put everything into, all oil and gas or all commodity type names. I kind of like that healthcare starting to take up, because I feel like now I have different basket, and it gives me a little diversification in case one sector goes south on me. But these are working very, very well. I'm happy I'm already in GDX. I can potentially add to GDX here. I like that a lot. I can add potentially to one of these sectors that are working really nice for me. Especially if move pulls back a little bit, maybe I bump that up a little bit, and just again just add a little bit to it. But they're working nice. They're all in the money, so that'll be nice. As far as average percent winners and losers, I don't love this. Again, it's not completely accurate, because there's dividends even in some of these names that I've received already that are not reflected in here. And so again, and all of these are already in the money. So because we're doing weekly charts, and again, it's not like this is an explanation, it's not like an excuse or anything like that. This type of statistics is going to take a little bit longer to really materialize, to show winners versus losers, because you're going to have to cut these losers early on, but these winners could run for potentially months, and it won't actually be shown up. It won't actually show up in these statistics yet. Okay, so again, just letting you know why these kind of look this way. It's kind of expected. I'm expecting cyber to to stop out this week. That's my expectation. So it's funny. My winning percentage will go up, but my average percent winners will be, kind of lower versus average percent of losers. Again, because again, the dividend situation and because they are kind of pulling back and stopping out versus these guys, which are running hard. Okay. So that's what I got for you this week. Again, I think there's a lot of opportunity out there. I think that we all can outperform the market doing basically weekend work, right? And doing very little in during the week. You can set up buy stops at the points that you think are actionable. And some of them, like so GDX, let's say. So in GDX, let's say you say, okay, I want, I'm looking for maybe early, weakness in the week. And if it gets to $38 or $38.50 or something like that, I want to buy. So you put a buy stop there and you're at work or whatever. It comes down intraday, tags it, and then starts to move higher again. Well, your buy stop will hit, market order happens, and then potentially you get a great risk reward right there. Okay. And let's say it continues to lower. Well, then that night you could put your stop in at, $36. And if it continues lower, well, then, you lost $2 on the trade per share, but it's, less than 4%, about 4% or so. So it's not that bad. All right. That's what I got for you. Hope you all like this. Good luck this week. Hey, if you like these types of videos, let me know. Let me know by a couple of ways. You go ahead and like the video. You subscribe to my channel. Leave me a comment. Tell me that you liked the video. Tell me what you think I missed. Tell me what you think was the best looking chart. Maybe it's one that I went over that that I didn't have my best charts. Maybe it's one that I missed, and you think that there's a chart that's outperforming better, and I just kind of missed it, right? So yeah, I do like that feedback. So I appreciate that. Again, hope you all have a great week. Good luck, and we'll talk to you soon.